Hey Bob, welcome to the Q&A webinar. Do you have your speakers and audio turned on today? Oh, great. Well, feel free to chat. This is a Q&A webinar, so people hop in and out, and I help explain the strategy and answer any questions. So right now it's just you and I today. If you like, I could start off with a overview and see if you have any questions after that. Okay, great. Let me check your audio. Okay, do you want to check your audio, Bob, and see if it's working? You want to do a audio check, Bob, and see if your microphone's working? Or would you prefer to just send your questions through the chat? Oh, okay. Yeah, feel free to leave and come back in if you want. There's no rush, and this webinar repeats every Tuesday. Welcome back. All right, let me unmute you. Testing 1, 2, 3.
I can hear you. Can you hear me?
Yes, sir. Great. Well, we have a small crowd today. This is a new webinar, a new product that we're releasing just today. So people are still signing up, and it does repeat every Tuesday. So thanks for joining, and I'll start off with a quick little tour and then see what kind of questions you have. Okay.
Okay.
So this product was given birth based on 12 years of managing all the top dogs out there, from the Mad Hedge Fund Trader to Timothy Sykes to Jason Bond. I was the manager for a company called Market Authority. And so most people who are joining our program have purchased products from that company between 2009 and 2014. And so this is really the result of seeing the breakdown in investors actually getting the result of the advisory. And the big thing I noticed in a decade of doing this is that most advisory services out there are really trying to outperform the benchmark of the S&P 500. And to do that, they're trying to predict things that are unusual that will happen in the future. And quite often they can do that in a rare moment, but over the long period of time, that typically ends up underperforming the index. And so our product came out to not try to beat the market. Our goal with this program is to create an index or purchase an index and then write covered calls against it for income and have a sharp eye for protecting the underlying asset. And so we have a number of strategies that have different levels of complexity The easiest is our basic membership. And why it's so easy is you only have to keep track of a single security. And so if I zoom in on this program, is that easy to see for you right there?
Yes.
Okay. So our easiest strategy is the SPY ETF. You're familiar with the SPY ETF?
Yes.
Okay, so it's the highest traded security in the world. And what's really beautiful about it is that it automatically gives you exposure to the top 500 corporations in America. So that provides a lot of protection in the underlying asset. We know if the S&P 500 goes down, unemployment's going up, real estate's going down, bond yields are flying high, we got big problems. And so for most of our clientele, who are typically 50 to 70 years old, this strategy makes a lot of sense. You're only keeping track of a single ETF, and you're able to essentially rent it out to what I call gamblers or speculators every Monday, Wednesday, Friday. And typically we will look to receive around $100 credit, sometimes more, sometimes less, against 100 shares of the SPY ETF, which sounds small, but when you do it 156 times a year, you can quickly do the math in your head. You're looking at $15,000 of income just from writing a slightly above the trading price covered call 3 times a week. So this is a popular program and is the most easy to keep track of. You can follow this program without having to use your spreadsheet, although we hope you will. But this is a popular program and the startup cost to do that. Hey, Robert, I'll got another guy joining in. Robert, welcome. You want to do a little audio check there, Robert? Not everybody likes to speak out. If you want me to mute you, Robert, no problem, and you can always write questions below. So I'll continue. So again, our product's about trying to generate consistent retirement income and focus on protecting our capital. So our most basic program really makes the most sense for most people. It puts most of your capital in the SPY ETF and has a 10% cash position, which we can use to hedge. So when we think there is a serious risk for downturn in the market, that's when we'll turn on the hedge, which will involve approximately 9% of your portfolio purchasing an in-the-money call option on the VIX and a 1% position in an out-of-the-money QQQ put option. So that's how we'll hedge for bigger downside risks. In the short term, we're able to protect our position every 48 hours with a covered call. For those of you who don't have $28,000 to start off with 100 shares of the SPY, we also publish a strategy revolving around the TBT ETF. So that's an inverse ETF that's based on the 20-year treasury. So our expectation in the long term is for that rate to rise, which will make the underlying asset rise as well. In the meanwhile, we're writing a covered call every Friday against a TBT position and rolling it over. So far, the SPY portfolio, since we launched this right in the middle of the December massacres when we got this technology developed to create these spreadsheets and send them to each of our clients so they can manage their portfolios. And so this had to suffer through one of the worst downturns in the current cycle. It was like an 18% crash in a very short period of time. But because we're writing the covered call, the drawdown was not nearly as bad. And then on the recovery, of course, we didn't capture all of that profit either by writing the covered call. So the end result with this strategy is that we can take out a lot of the volatility in our returns. So it really calms down the drawdown. It does mute some of the potential upside, and it leaves you with a very predictable source of income. So for most people, this is where we like to see you start at. Before we'd recommend a little more advanced strategy. Today's update is most attractive to investors who have over $150,000 in capital put to work. However, you could follow this program with simply the green area or the yellow if you did want to start off with less capital. And the trading video goes into that. I can answer any questions about that. This is somewhat similar to what the SPY ETF actually owns. Now, we've removed certain securities that cost over $1,000 from this portfolio, such as Amazon, Google, and Berkshire. So if you do look at the underlying assets held by Berkshire, you're looking at about half of the total portfolios holding Apple, Bank of America, and Wells Fargo. So the main idea with our high yield covered call program is to remove the cushion of the S&P 500 of the SPY ETF, recreate something that's very similar to it, and create this allocation right here, which in turn generates this many shares per company per $150,000 of capital. And once we've done that, it does give us a little more leeway to write the covered call at different prices depending on what's going on with that specific stock. So that can help enhance the returns. And there's also a good argument that this portfolio is somewhat safer than the S&P 500 in that the trend over the last few decades is that one company takes over the entire market share. So while the SPY ETF has only a 5% position in Microsoft, this portfolio has a 21%. In the same note, it's certainly much easier for certain short-selling hedge funds to attack an individual company rather than the entire S&P 500. So with that respect, this portfolio does carry more risk. If we come down here, this is where we insert our buy and sells for our stocks. And this automatically reflects up into our trade alert area. And you can note that I do only buy round 100 lots. And that's because I want to be able to protect this position every Tuesday via the covered call. So I'll pull up today's trade alert and we can look at some of the option activity that helped influence our trading decisions today. So last week we were playing the portfolio very defensively, and with the Fed announcement, we had a very crazy run up and then crash in the underlying, and we ended up getting assigned. So we had the protection play and we're assigned, and because this portfolio by design only trades Tuesday right at 11 Eastern, we had to wait until this morning to get back into the position. So let me zoom in on this trade alert. We can kind of walk through it. So the first step was to take a look at the top of my platform, and it tells me exactly how many shares I need to purchase to hit my target allocation per company. And so this resulted in the following trade alert. This was then purchased, which you can see in this screen. Depending on your broker, you may or may not have commission costs. Robinhood is a company we recommend that has completely free commissions on every last thing that we do in our portfolio, from assignment to option writing. Interactive Brokers is a great one. Thinkorswim, I know, is where a lot of people come from. But so this is the entry point, and then the next step was to write the covered call. So we give you a summary of that right here, so you know which strike price. Now you're not necessarily going to get the same credit because there's a small amount of delay from when we issue the trade to when you receive it. But here's what's different between our advisory and most is that you know exactly the date and the time that you will receive your trade alert. So you can plan on that and get much better results than trying to have to react to completely random times and trade alerts. Also, our product is completely focused on the most liquid ETFs and securities that are the most stable and move the slowest. Because again, we're trying to help you actually get the same result as we publish. For folks who are totally new to this, sell to open is how you open a covered call. Below that, we have the charts, which we update each week. Microsoft has a very impressive chart, obviously, and that's why it's the cornerstone of our high yield covered call strategy. And it's also the largest position in the SPY. So you could argue that this is the most important company in the S&P 500. In terms of how we're deciding the strike price, number one, we're looking at all the news of each of these 8 companies to look for dangers. But more importantly, we like to see what the market's actually thinking. So each week, when we do choose our strikes, we're looking at the volume for the time period we're going to do the trade on, which is always not this Friday, but next Friday. And we'll see, is there a lot of volume flowing into the put option market? And if so, at what strike? And so in this situation, you can see there's a lot more call option activity than put option activity. So we ended up choosing the 120 strike. Meanwhile, Apple's come out with 1 million new services yesterday, and for whatever reason, there is a record level of short interest on the stock. And if we look at the option market, you can see there is a lot of volume piling into this 180 put option. Now there's also a considerable amount of call option volume, and in this case we chose the strike price right at the money at 190. If we look at the Facebook, we can look at a similar situation. There is a little bit of volume in the put options, but primarily this is being heavily loaded right here at the 172.50 level. So that's the basic analysis in terms of how we're choosing our strikes to generate income. So with that said, let me just flip to the last class we have that really ties into all this. Is our Thursday class is the, oops, right here. This is our emerging markets class where we're also generating retirement income. So it's a covered call strategy. This one we roll over the position every Thursday, same time, same webinar time. And now we're looking to at least get 10 to 25% of our portfolio outside of America and use country-specific ETFs to create that. So the core ETF for this portfolio is the EEM, which is the second highest traded ETF in the world, only outperformed by the SPY ETF. And then if you look at what does the emerging market EEM ETF actually hold, well, you're going to see that it ends up holding this basket of countries focusing on China, South Korea, India, Russia, and Brazil. So depending on how much risk you want in your portfolio, you can play with how much capital you might allocate to the emerging market portfolio. Now, folks who do join our Diamond program get all of the programs included. And if you are an investor with over $500,000 and you have no need for more than $10,000 a month of income, that's when I would recommend that you put the majority of your capital into the SPY trade, which delivers less yield on the covered call, but certainly can handle a lot more volume and is less volatile. And then moving a smaller amount of capital into your high yield covered call strategy and an even smaller amount of capital into your emerging markets portfolio. So that's the basic summary. Again, our idea here is to not try to beat the market. Let's take the most popular indexes that has the most money flowing through it. Let's try to reduce the volatility through a covered call and be ready to put on a smart hedge when things clearly look risky. What questions do you have so far, Bob?
As I understand it, that the one that goes on Tuesdays, you're establishing calls with 10 days to expiration, not that current Friday, but the next Friday,
Yes, sir.
and you buy them back when they get to a certain level, or you let them expire and then just reload.
Well, we don't want to let them expire because then we're going to miss out on option premium. So we'll never, rarely, we'll let them go into expiration. There might be an oddball case where we want to get assigned, where we might do that. So yeah, we will buy back the covered call next Tuesday and then issue a new covered call the following Friday. And a popular term for that is rolling the position.
Okay, what's the mechanics of that? I missed some of that.
Super easy. Let me show you how it works. So, yeah, so this is kind of like you own an apartment in New York City and you're using like the Airbnb app to rent it out in a short period of time, but for a very high rate. And so that's the general idea. So on the Microsoft position, can you see this?
Yes.
Okay, so step one, and this is going to look exactly the same in any broker dealer. Okay, so it'll be very similar. This platform is another broker that I really like, Tradier, and this is what is this platform called? Trend. So this is just, this is nothing fancy. It's just a basic, simple option trading platform. Okay, so first you got to buy a lot of 100 shares of Microsoft. So that'd be step one. And let's look at today's trailer. We'll do the exact trade. Okay, so we purchased the shares. Now we click on the option market and sell to open. Expiration, April 5th. It's always going to be the second option. That's the one we'll always be writing at. The price is at 120. And it is a call option. So right now you can get $53 per 100 shares from this and still benefit from some of the upside move. So if we think the underlying security will travel higher in the next week, the covered call will be above the trading price, the strike. Now, if we think the opposite's true, if we think it's going to potentially travel lower, then we'll write the strike below the trading price. So now let's see, what would we do next week? So next week, we have to buy to close. So of course it costs the same right now.
You do that on
And once
Tuesday.
we bought to close, the week after we would sell to open and drop it down. Then we would buy to close, then we would drop it down. So this is kind of the robotic movement you're going to be doing every week. So now, so the difference with the SPY and this is we're only going to do it once a week because these only have weekly options. But we have to do it for 8 securities. So it's a little more work the one day we do work.
And you do all
Now
that.
the main benefit is we typically will get twice the yield on the covered call with the same ratio of strike by doing this.
Did you do all that rolling on Tuesday?
We do every single thing Tuesday, 11 a.m., video trade alert, followed by the webinar a few hours later. Normally our webinars have a lot more folks on it. This is just a new one we just released this morning, so you literally had to open the email, click on it today. But yeah, we have a whole community of folks. I make sure you're getting filled. We've never had fill problems. Even on the TBT ETF, we're not having fill problems, which is insane because it has almost no volume. So these are very stable. These are the best products in the financial market for equities, and we're just writing covered calls on them. So we use that covered call to generate retirement income and also help protect against downside on the underlying. In general, though, we want to be writing the strike price above the trading so we can appreciate the underlying asset plus take the money from the speculators who are, trying to guess how high the stock's going to go in a week.
You avoid the weeks where it has earnings or dividends.
Dividends we want to get paid out on, so definitely. And we can get a very good idea of what the market thinks by looking at the trading volume on Tuesday. So that really takes a lot of the guesswork out. If you see a huge amount of put option volume and no call option volume, it doesn't take a rocket scientist to see that there might be something going on right now. So certainly that's the main value I provide. The first value that we're helping investors do is stop doing whatever you're doing, because most likely it's too risky for your goals and will underperform the market. So just by getting you to switch from trying to beat the market to just follow the market, most people are going to have better results from that. After that, my job is to certainly try to help spot out potential risks and avoid them. And so when you have that mindset that you're not trying to beat the market and that you're really just concerned about not losing your capital and being able to sell the covered call, it's a product that people are really just falling in love with. What kind of trading are you doing right now, Bob?
Oh, something similar. I'll sell covered straddles on the SPYs, the Qs, occasionally the S&P futures.
Yeah, a lot of folks do that, and then they have a change of direction in the market, and that's when you take the big hit. And so yeah, that's one thing I don't want in our product is leveraged option strategies where you can potentially lose 10, 20, 30, sometimes 60% on a single trade. And what's beautiful about this, by owning the underlying asset, doing the covered calls, you can put much more capital to work and not have to worry that you're going to lose 10, 20, 30% on a single trade. So I'm sure that when you do those strategies, you're a little nervous to put your whole portfolio to work.
I really get very little at work most of the time.
Yeah. So it's kind of like you're out there playing with a BB gun when you could have a machine gun.
Yep.
Now I do recommend, because I know most of our clients are hobby traders, this is your bread and butter. Think of this strategy as your bread and butter. If you want to speculate, have a side account where you can go, all the stories I've heard from people. Robert says, what percentage of the time are you called out of the stock? So yeah, let's talk about how we protect our capital with the covered call, which is the most likely occasion to be assigned, which is a great question. And so in terms of general direction, we're primarily focused on the central banks and the interest rates. So right now they're very dovish, so we're bullish on the market, and there's no signs of tariffs being escalated. So currently we're relatively bullish and writing the strike above the trading price. Now there are various things that I do follow where we will, even in a bullish condition, play it safe. So there's a lot of times where I want you to play it safe. And we can actually make the same level of income and have no loss on our underlying asset with what I'm about to show you. So let's take a look. Pick a stock, Robert. What's your favorite stock right now?
I don't have one. None.
All right, well, let's just use, how about the SPY? Everybody knows the SPY. All right, let's pretend we're doing the same April 5th expiration. All right, so if we look at this right now, I could sell a 275 strike for 592. Oh, sorry, excuse me. I can sell a 275 strike for $6.64. Now, why on earth would I want to sell my shares, which trade at 280 for 275? Well, the only reason anyone would sell that call option is because of the spread on the credit we receive. So we're receiving, in this particular case, about $1.64 guaranteed profit if we're assigned per share. So in this situation, if I was worried that the SPY ETF by next Friday might fall to a level of 275, I would write the 275 strike. And if we were assigned, because I was wrong and the stock went up, we're going to miss out on a lot of that upside potential, but we're going to get the guaranteed spread between the loss we take selling the stock and the credit we pull in up front. So the answer to your question is we will get assigned as often as possible when we're worried about the market. In terms of when we're not worried about the market, we typically don't get assigned and can just cover the covered call for a loss, but the underlying asset has appreciated to the effect of generating a profit over the same period. So really our only concern with this strategy is if our underlying asset drops. If we get assigned, that's a good thing. That means we've made a guaranteed safe profit. Now, if we don't get assigned, that's when we could potentially be a little concerned. Now, we may not realize the loss in our underlying asset and get to keep the complete credit, but downside risk is far more concerning to us than upside risk. So we've only been assigned once in this high yield program, Robert, and that was on every position last week. So what did we have? We had the Fed coming out, and I was worried they were going to say they're going to start raising rates because everybody's thinking that the Fed is losing its credibility. And what did they do? They did the opposite. They became even more dovish. So there'll be plenty of times where there's good reason to be worried, and we will play it safe. You might get assigned, and if you do, you have a guaranteed profit baked into the trade from the get-go. Now, the downside, you may miss out on some of the growth of the underlying asset. But our clientele is not concerned so much about growth. They're 50 to 70 years old. They're looking for a consistent way to generate retirement income without having to work their butt off to do it. Yeah, Robert. So the Diamond program, we can make it so you don't receive the alerts from the emerging markets portfolio and the SPY. And I could probably throw an extra discount for you if you wanted to do that. But it is, normally free with the you normally get the basic and the gold program free with the Diamond. Is there some reason you're not interested in emerging markets? You got any more questions there, Bob? I think Robert's still typing his question right now.
I don't know if you're going to cover the pricing.
Pricing's top secret. No, I'm just kidding.
I figured it was.
No, I'm just teasing you. Okay, Robert wants to work once a week. That makes sense. Well, Robert, hey, I'm gonna have one of our 2 support people give you a ring whenever you're ready, and they have some discounts they could offer you. But yeah, I'll go over the pricing just in general. So our basic program starts at $997 a year, and our support team, if you do call them, has a small discount on this product, and it trades 3 times a week. It's a lot more work, and it gets half the results. That's why people do like this program. This is the diamond level program that runs at $5,000 a year. The support team has a lot bigger discount they can offer you relative to the basic program if you call them, and they're very helpful. Most of our support staff actually bought our products years ago, and that's how they ended up working for us. The gold level product is the emerging markets. This is included with the diamond program for free. So if you wanted to just read along, we can make sure you get that. If you want to not get that content, no problem. This is our $2,000 a year program, and it does include the basic. So this allows you to have the American companies with the SPY, and then you can diversify. Right now, we're recommending no more than 25% of your portfolio that's allocated to this strategy go to the emerging markets. And I will increase that recommendation soon as we see the emerging markets start to outperform the SPY. This has been a prediction for years, and it's starting to come true, but not just quite yet. So we're still a little light on the recommendation for allocating there. What about you, Bob? Which of these portfolios makes the most sense for where you're at right now?
Well, I like the thought of the diamonds, but that's probably a bit pricey for me to get started. This isn't a month to month you could cancel when you wanted?
Yeah, so this portfolio, we're looking at generating around $5,000 a month of income, and per 150,000 that you invest into the portfolio. Now, again, you're basically forfeiting part of the upside potential in this portfolio. And these stocks, as you've seen, are just incredible charts. So that's kind of the catch. We're helping you get the best securities, and we're helping you pick the right strike price so you get a stable income. But again, the downside is if these stocks take off, we're going to miss out on some of that upside potential. But our fear is much more revolving around, how much money might I save you this year just from the strike prices and spotting out some disasters. So when you look at it that way, can we avoid disaster? We have a 7-day refund policy, and you can also credit any purchase, Bob, towards a more advanced thing. So if you want to start off at the basic program, make sure this is the real deal. Make sure this is something that's not too boring for you. Some people say this stuff's too boring for them, and then they go lose some money and realize this is a lot smarter. But yeah, if you want to start off with a smaller plan, we will credit any purchase you've made towards a more advanced program.
But you do have to purchase a full year, not put it on a month to month.
We could set up a monthly payment plan for you, Bob, if that helps. But typically, most of our clients usually just pay for a year up front, and that's that. But yeah, we certainly could create a monthly plan for you.
Can you speak to how many clients you have?
Sure. Yeah, we have 150 clients right now, maybe 148. Now, Market Authority, which is where we're slowly, we're basically inviting about 30 to 40 people a day to take a free trial. That database of that company was tremendous. That was one of the fastest growing companies in the space. But again, I just wasn't happy with, we've got these great track records, we've got these people with decades of experience. And at the end of the day, we got people who are not getting the same result. And no matter how hard I tried to fix that problem, it just was very hard. It's hard to get the traders to change their ways so that people can actually follow it, because they think, they want to be this active investor reacting to things as it happens. And the problem is that's just not suitable for most people's lifestyles. So that company had 8,000 customers who had paid anywhere from $2,000 to $20,000 from 2009 to 2014. After that, took a few years off because, as I said, we were making a buttload of money, but just wasn't happy with the discrepancy between the client and the guru. So this program's been out for a few months. It's new. And again, part of that is we're not trying to brag about past results. What I really want is for you to see what we're doing, try it out during your free trial, see it works. There's no secret sauce. There's no magic prediction that has to come true. This is just a very boring, repetitive bread and butter strategy.
I think I understand how I think you called it the diamond, that one with the 8 stocks, Microsoft, Apple, Facebook, works. On the SPY, you do a Monday, Wednesday, Friday trade. Is that always setting like a trade on a Monday that expires the following Monday, or is it like?
No, the SPY. So the SPY is a better product for this because it has 3 covered call. It has 3 expirations per week. So there's no other security in the world that has that. So we're literally rolling over a 48-hour position, and so that compounded is hard to compete with. So for people who have a ton of money, it makes sense to still put most of your money in this SPY program and to have less volatility. But for folks who have maybe 200 and not more that they want to put into this program, then it might make sense to put 150 right here in these 8 stocks, and then 50 over here. And what's nice about this is we have some exposure to the precious metals and to the most competitive market against America. So if some of these forecasts come true and we have a declining dollar, we have a stronger emerging market, this portfolio could potentially start to outperform. It hasn't yet. It's lagging by about half the profits so far relative to this portfolio. Oh, right here. But again, when you're going into retirement, you want to think long term. We're more worried about losing money than making money. And so if we have better diversification, we have less chance of taking a big hit. And so that's the core concept with this whole product.
And on the SPYs, you're still selling covered calls, but on Monday you're selling a Wednesday expiration. On Wednesday you're selling a Friday. On Friday you're selling a Monday.
Right. So we're constantly collecting option premium.
Okay.
And so that's kind of it's a big benefit. If the SPY does start to move, we can readjust our strike every 48 hours. Whereas in the other program, we're by design only optimizing our portfolio once a week.
If it starts a steady decline, are you looking to sell in the money calls to get yourself out of the position?
So no, yeah, I never want to get out of the SPY. If anything, we will just. So here's the deal with the. Let me show you this. Okay, so the VIX, I'm sure you're familiar with, is an easy way to judge relatively what sort of yield we're going to get on our covered call. And so the higher the VIX, the greater the covered call income. And so we actually look forward to a market decline. Number one, we can generate the exact same profit from the option premium, no matter which way the market goes, if we've chosen the right strike price. And then two, if we really do start to see signs of a market crash, then we can start adding our hedge with the VIX and the QQQ. So with the SPY program, we have three ways to protect our capital. Number one, we get to move the strike price every 48 hours, which is huge. So SPY is not going to travel too far in a 48-hour period. And then two, if we really do think that there's a bigger long-term risk, then we use the long positions to hedge against that risk. But right now, we're not recommending a big hedge, and we're happy to just protect it with the strike. Now, could that scene change? Sure. So if we saw the Chinese and Americans escalating the trade war, we become much more bearish. On the same note, let's say they do strike a deal. Stocks fly to new highs, and yields on the treasuries start to push above 3.5% again. That's going to potentially start causing even more problems with the Fed becoming hawkish. So the Fed's hawkish, will be hawkish. If the Fed's dovish, will be bullish in general. But the long-term view is more, think like Warren Buffett. We want to own the companies that are going to be generating profits 10 or 20 years from now. And so when we look at this high yield, we know Microsoft's not going anywhere. They practically have a monopoly. As we go down the list, it's less the case. Apple has a great business, but they have a ton of competition. Facebook perhaps has a relative monopoly, but it's starting to see new competitors grow. And Intel has a ton of competition, and as you go down the line, there's more and more competition. But most of these companies are actually the biggest position in Warren Buffett's Berkshire Hathaway. So the goal here is, can we predict a company that's going to last for 10, 20, 30 years and generate consistent retirement income? So when you look at it that way, and you ask yourself, is the value of Microsoft going to be more or less in a decade? Clearly it will be tremendously more valuable in a decade at the rate that technology is growing right now. There's a lot of popular strategies, a lot like this, but the typical mistake is they start chasing super high yield stocks. So let's talk about one of Intel's biggest competitors, NVIDIA. It was a lot of fun writing covered calls or buying call options on this stock for 2014, 15, 16, and 17, and most of 2018. And then that stock plunged 50% compared to the S&P 500 that only plunged, I think it was 19.5%. So if you're a young fella and you want to take some serious risks, I think that's what most products in the market are really good for. But the problem is the clientele is not young folks. They just don't have enough money to follow these programs. And so we end up with folks in the 50 to 70 year range who have lost a ton of money following all kinds of crazy strategies, and they slowly learn to follow the big money and play it safe. And so that's really the goal of this product, is to help steer people away from danger and help them follow something that's a little safer, a little smarter, and more consistent. And a lot easier. Yeah, my trade alerts take you 3 minutes on the SPY, and you could do it from your phone on the road. We're not doing any crazy strangles or straddles or butterflies or calendars. You know, the list goes on and on. How did you do with October through December last year? Were you playing the downside or?
I've been a contrarian bear for way too long.
Oh, so you finally got a payday. Well, that's good.
Yeah.
Well, yep, it's a lot of fun, and you know, I've heard so many stories from different folks. Have you ever done any some of the worst stories where, gosh, very smart people, doctors, lawyers, all sorts of folks, binary options overseas? I hope
Nope.
you haven't. I hope you haven't been caught in any of those scams. They, yeah, it's a long list of scams out there. Well, right now we're not bearish, but would love to be. Would love to be bearish, and we'll flip on a switch once we see some sort of sign. But that is the big concern with this product, is the downside potential momentum in these different underlying assets. Because it's, you know, everything in the financial system is extremely levered. And again, you know, if we are going to have to experience something like that, what do you want to own? You want to own NVIDIA, or do you want to own the S&P 500? So it sounds like you're leaning towards wanting to try out the 8 stock strategy. Is that right? Or are you more interested in just starting off easy with the SPY?
Could you try the 8 stock, and then when it comes time to, you know, on a free trial, and then only go with the basic?
Yeah, so you're already on the free trial. You have the current trades. You could enter today's trades right now. And if you need help with your spreadsheet, could help you. You could wait till next week's trades if you want to kind of think about it a little bit, analyze it. That's totally up to you. And yeah, you can downgrade, upgrade, whatever you want. We're really here to just, for once, try to help people actually get the result before they pay any money. So that's why, you know, we believe seeing is believing. You have all the info, you have the spreadsheet, you have the full product. There's nothing being hidden. And then you have access to me after the trade alert. So if you do have questions, we're here to help you.
Now, the spreadsheet, is that just like an internet-based spreadsheet, or is that something I copy and have it locally on my machine?
Yeah, this is a Google spreadsheet. So we basically invested, if you think of it like a car factory, we have something like that for creating spreadsheets. And so on my end, I designed what I call the palette. So I'm helping design the various palettes of what you're going to use to manage your portfolio. And the typical overlays we have, usually we've grouped, sorry, let me put that on mute. Typically we've grouped the various securities into these different color-coded areas, which is the green, the blue, the yellow, and the red, and then the cash. And we control how much of our capital we want to be holding in each of these sections. Typically, the red in each of these is a hedge. However, in the global growth, or rather the emerging markets, it's a specific OTC stock. Then from up here, you can play with the exact settings. And so in the high yield program currently, your default settings is 23% on the steady income, which equates to a 23% position in Microsoft. 40% into high yield. So if I was becoming really worried, I might switch our allocations to be heavier on the banks. You know, who's going to get bailed out? Intel or Bank of America? Maybe both, but most likely Bank of America would be higher on the priority list. So certainly we will modify these settings if things start to get hairy. And so each pallet is designed, and then we can shoot these spreadsheets every year. I may update them, and then I can send you a new pallet to manage your portfolio. And so this is just a very basic thing that most investors don't have. They have no management system to organize their thinking and their strategy. So yeah, in your email today, you have a link to your spreadsheet. It's a Google spreadsheet. And so I could even on the next webinar, because we're running out of a little time today, I could actually log into your spreadsheet and help you fill it out remotely because of this technology. Oh, you're still there, Bob?
Yep, I'm still here. I just didn't read deep enough in the email. I just saw register for the webinar and went there.
Yeah, it's a lot of info, and that's why it's important to have the direct line of communication between the two of us. But yeah, you're gonna have a link in your daily email to your spreadsheet. There's also a getting started page. Now, just a fair warning, what I call the palette looks a little different, but the mechanism of how to fill out the sheet is the same. So the tutorial will teach you how to use the platform, and it's like a 10-minute video. It's very simple. And so yeah, this is the key tool to manage your investments with this strategy. And then the trade alerts are right below it. You know, these are not fast-moving stocks. These are the highest traded, largest market cap stocks in the world. So that is, of course, to help make sure that everybody can get the same trade at the same time and not have to worry about prices flying all over the place. And we also have another webinar. Well, we have a webinar every day, so you'll get invited to each webinar during your free trial. And you also get a free week added to your free trial just for showing up. So I appreciate you showing up and quizzing me. So don't feel like you're in a rush to purchase anything right now. Really, we want you to get your spreadsheet, start using it, see this works, and then decide, is this better than what I'm doing? Does it fit into what I'm already doing? And if so, then it makes sense for us to work together.
Okay, it says my 30-day free 30-day trial ends April 11th. That's only 2 weeks from now.
Okay, well, yeah, I'll make sure to get an extra week added onto that. And if you feel like you've only had, most of our free trials are 2 weeks now, so I'll see why it said 30 days.
I've been watching your emails for a while. It's been advertising 30 days, and I've been busy. When I slowed down, I was going to go in for a 30-day trial, and I'm getting close to that point.
Oh, okay. Well, hey, we're not, we're not super anal about the expiration date. So if you feel like you need more time, fine. If you're ready to order at some point, our team's here and they've got discount codes for you. If you want to switch from one program to another, we'll credit anything you've spent. And we do offer a 7-day money back guarantee on any purchases you make.
Okay.
But, you know, what you're going to see from this week to the next week to the next week is going to be relatively the exact same boring thing over and over and over again, which is what we want. We want you to know exactly when the trade's going to come out. We want you to know exactly what security the trades are going to be for. And we want you to have a very general idea of exactly how to place that trade. Is the strike price moving a little bit? Yeah. Could we maybe jump into a hedge at some point? Sure. But in general, it's just the same repetitive system.
What time do the basic trades come?
The trades come out every day right at 11 Eastern.
Okay.
Maybe, you know, within 15 minutes. And then the webinar is at 1 Eastern. And so it's the same every day, Monday through Friday. Excluding, obviously, if there's a market holiday. And if that's the case, I may slightly move when a certain program gets its trade alert so that nobody misses out. Usually the holidays tend to be on a Monday, so that doesn't become a big problem for the more advanced programs, and really just a slight modification. So if we had a Monday off, I might have the expiration close on the next Wednesday, so that we wouldn't have to worry about the Monday that was a holiday in the markets. What other questions you got for me today, Bob?
I haven't ever knowingly started my free trial, have I?
What's that?
Have
You want me to
have
start your trial as though it started today?
well, has it started? I'm just not aware of it.
Yeah, so let me tell you how we go about getting you guys on the free trial. So basically, most companies in this industry, they have to go spend a ton of money on advertising. And so the end result is they don't have enough money to pay a good guru a very good payout. And so they end up hiring not the best people to be providing the advice, and all their profits get thrown into buying online ads. But our company has a huge database of people who liked our previous business, which was Market Authority. So what we do is we send out 100 emails saying, hey, we'd like to give you a 30-day, well, it's now a 14-day, but I'll make sure you get 30 days, okay?
Okay.
We send out emails saying, hey, we just activated your free account. And if you open the email, then we notice that you're reading our emails and we start your free trial. So that's our whole marketing system. It's costs us nothing, and it allows us to have less clients, more one-on-one time, and overall, I would say a much better business. And I'm sure you've seen all these sales videos that promise you the sun, and you have to pay up front, then you get to try the program. We can see clearly we want to do the opposite here. No sales pitch, try the product out. If you like it, then it's an easy decision. So what do you think, Bob? Can you make it on tomorrow's webinar and we'll continue the dialogue?
Yeah, I could probably do that. I just want to think about it tonight, and I'll probably join you again.
Okay, great. Sounds good.
With this email, I can still nose around, look at that spreadsheet, things like that. Correct?
Yeah, of course. So you have the full product during your free trial. You have your copy of the spreadsheet. That's yours to keep. We're not going to ever delete that or take it away from you. So you can walk away with that and keep it no matter what. And yeah, our goal is to give you the real deal, see what makes sense for you. And if you like it, then you can join.
Okay, that sounds
All right.
good. I think I'm good.
Okay, well, I'll talk to you tomorrow then.
Okay, doke. Thank you.
Okay, bye.
Bye.
Sweet. Wow, that was good.